This is the sum of October, November 2018, paper 22. Like admission was a part of your previous syllabus in AS and now it is a part of A level. Okay.
Okay.
Now they've asked you to make partners capital account. Do you know the format of partners capital account?
Yeah.
Tell me.
So first we have to write the balance brought down, then we have to write the revaluation, then we have to write the goodwill raised and all that, like goodwill raised on the credit side, old partners, old ratio, and then on the debit side we have to write goodwill like goodwill written off new partners.
And profit on reval will come here, loss on reval will come here. Are you
Yeah.
with me? So
Yeah, 1 second.
what is the balance begin down? I have Jack and Kelly. It's 33,000 and 71,000. Are you with me?
Yeah.
Okay, since you've already tried this sum before, so you know, you have read the questions, right?
Yeah, yeah.
Okay. Assets were revalued upwards by 21,000. That means the assets were revalued by 21,000. There is a profit on revaluation. Profit on
Yeah.
revaluation will come on the credit side.
Hmm.
21,000 will be distributed amongst the partners in the ratio of 2:5.
Hmm.
Can you tell me the amount, please?
Yeah, 15,000.
So this 21,000 you're going to distribute in the ratio of 2:5. So what is the amount? Can you tell me?
Yeah, it is 15,000 and 37,500.
Anything. It is 6,000 and 15,000.
You're talking about goodwill or revaluation?
Revaluation.
Oh, sorry, I was saying goodwill.
So goodwill is 52,000 and it has to be raised and written off.
Hmm.
So goodwill raised on the credit side, goodwill written off on the debit side. So it will be raised amongst all partners, old ratio. Can you give me the amount?
Yeah, 15,000, 37, and 37,500.
And written off?
10,500, 26,250, and 15,750.
Okay, fine. Future profit sharing ratio is 2:5:3. This you
Hmm.
will use to write off the goodwill. Are you with me?
Yeah.
Okay. Now they are telling this, read this fourth adjustment very carefully. It is the thing that is most difficult. And if you read it properly, you will be able to analyze it.
So balance
Balances of partners' capital account. Which balance are they talking about?
partners capital account.
The opening balance or the closing balance? The closing balance. Okay.
Closing because it's after. Huh.
Because it is after Liam's admission. Should
Hmm.
total up to 120,000 and
Okay.
be in the same ratio as profit sharing ratio. That means the capital of Jack, Kelly, and Liam. The balance of their capital after admission should total up to 120,000. It shouldn't be more.
Okay.
And this 120,000 should be in the same proportion to the profit sharing ratio. That means it should be in the ratio of 5, 6, 7, 8, 2 by 10, 5 by
5
10, and
and
3
8
by
three
10.
by 10.
So they are indirectly giving us the closing capital.
Okay.
That means they are telling us that the closing capital is not the balancing figure. You need to have the closing capital total to 120,000 and this 120,000 should be in the proportion of the new profit sharing ratio. So what will be the closing capital? It is the closing capital of Jack should be 24,000. 5 by 10 of Kelly should be 60,000.
Okay.
And for Liam, it should be how much?
36.
So they are
Yeah.
telling us the capital account closing balance. So I will write balance closed down. What is the amount?
24,000, 60,000, and 36,000.
24,000, 60,000, and 36,000. Are you with me?
Yeah.
Each partner would either pay funds into or withdraw funds from the bank account in order to achieve this requirement. That means I have this requirement, that is for sure. If there is
Oh,
some shortage, it should be adjusted through bank account. So in this case, I will close individual partners' accounts separately. Now let's check about Jack's credit balance. How much is it? 33,000 plus
yeah.
6,000 plus 15,000. Can you use a calculator and give me some answers?
54,000.
And what is Jack's debit balance?
10,000 plus 90. 10,000 plus
10,500 plus
24,000.
24,000. 34,500.
Yeah. 34,500. Huh.
That means Jack's credit balance is more, that I will write on both the sides.
Yeah.
And the closing balance should be 24,000.
Yeah.
So Jack has some excess funds in his
Oh,
account which he will withdraw. So 54,000 minus 34,000. So 19,500 is the excess amount in Jack's account which he will withdraw. So the entry would be Jack debit, bank credit.
credit.
In short, they are telling us that the balancing figure will be bank. Either money is
Okay.
coming into the bank or it is going out of the bank to achieve this closing balance. Are you with me? Either money is coming into the bank or it is going out of the bank to achieve this closing balance. Are you with me? Now
Yes.
let's talk about Kelly. What is Kelly's debit balance?
Kelly's debit balance is 26,250 plus 60,000. So 86,250.
What is Kelly's credit balance?
123,500.
Kelly's credit balance is 123,500.
Yeah.
So this will be written on both the sides.
Hmm.
Minus 86,250.
Yeah.
So money is again withdrawn from Kelly.
Hmm.
37,250. And for Liam, the debit balance is more. I can see this. It's 36,000 plus 5750.
51,750.
So what will I write as balancing figure over here? Bank.
Bank.
That is it. This is the information that they wanted us to give. That the closing balance should total up to 120, and this 120 would be a split of the new profit sharing ratio. And to
Okay.
achieve this balance, either you bring money or take out the money. We don't care. The balancing figure has to be adjusted through the bank account.
Okay.
Can you tell me what is meant by the term goodwill?
Yeah, goodwill is like the intangible value of the reputation of a business
Or
or customer base or location.
it is the value of the business? Or it is a difference between the net assets taken over and purchase consideration?
Okay.
Explain why partnership makes an adjustment for goodwill when they admit a new partner.
Yeah, to make
Whenever
sure that
admit a new partner into the business, we ensure that the old partners, which were the original partners, they benefit of the hard work they have done in before. That means a new partner is coming now, but the old partners were working from before, right?
yeah,
The hard work of the old partners is there from before. New partner will come in now, and enjoy all the benefits of the old partner's hard work.
Yeah.
So the old partners should get some amount for goodwill compensation for the hard work that they have done before, and now the new partner is coming and going to take the advantage of it. Are you with me
Yeah.
or no?
Understood. I actually understood.
So the adjustment is done to ensure that the original partners benefits of out of the efforts. Explain why the partners may not agree to have a goodwill in the book after admission. See, when they ask the old new partner to bring in goodwill, we say goodwill is raised. And goodwill is raised amongst whom? Old partners, old ratio. Because the goodwill is to compensate the old partners. Are you with me?
Yeah.
But then once he gets the goodwill, this amount becomes a part of the new firm.
Okay.
Then the partners agree that they don't want the goodwill to be seen in the books. So they write it off.
Hmm.
So why do the partners agree to such a thing?
Because they like.
It's very subjective concept. Valuation of goodwill is subjective because it is non-monetary.
Okay.
Goodwill is difficult to value. So what do is they ask the old partners to bring in goodwill and they distribute it. Only the difference remains with the old partner. Okay. And goodwill, we don't show it in the book unless it is purchased, because goodwill of any company can be harmed suddenly. Something might happen and the reputation can get spoiled immediately. Yeah,
Got it.
that is why they think that goodwill is subject to sudden change. So if any problems happen in the future, this will not show the real picture. That is why partners agree to raise and write off goodwill immediately. First do these three, then I'll go ahead. So now your partners are forecasting that the profit for 30th June 2019 will be 60,000. And this is 25% increase of the current year's profit. So if the current
Yeah.
year's profit is 100, this year's profit, that is 2019 profit, would be 60,000, which denotes 125%. So can you tell me what will be the profit of 2018?
Now, how to do? Cross
Cross
multiply.
multiply 100 into 60,000 divided by 125. So the profit for the current year, that is 2018, would be 41,000. And the partners believe that Liam's admission will result in improved return on capital employed. This is the belief of the partner that after the admission, the ROC will increase. Advise the partner whether they are correct in believing. So if I have to tell them whether they are right or wrong, I also need to know whether there is an increase ROCE or no. Yes or no?
Yeah.
So I will find the ROCE for 2019.
Hmm.
So ROCE is profit over capital employed into 100. Capital employed is capital plus non-current liabilities. So the capital of the current 2019 was 120,000. So ROCE for 2019 is 50%. For 2018, the profit is 48,000 and the capital was 71 plus 33, 104,000. So 46.15%. So after Liam's admission, the profit has increased.
Yeah.
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 By how much percent?
3.8.
3.85%. So whatever the partners are believing is correct. Are you with me?
Yeah.
So after Liam's admission, the profit will definitely increase. You get 1 mark to calculate return on capital employed for 2019, 1 mark to calculate profit, and 1 mark for ROCE. And then is the ROCE increasing or no? If it's increasing, 1 mark to calculate the increase and telling the partners that whether they were correct or wrong. Are you with me? With this, we complete this question of October-November 2018, paper 22, question number 2 of Jack and Kelly, which is related to admission.